Hello traders, we've just released our ADX MACD confluence algorithm, and we'll talk a little bit about it. The ADX MACD confluence indicator is one that we've had available for free for a while. You can go check that out. That's Trader's Ultimate Edge on TradingView. You can go ahead and get that indicator for free, and this is it here on the screen right now. You can see it gives you sell, buy signals. What it does is it gets the ADX and the MACD, and when they both get in confluence in one direction, it will generate a buy or sell signal. You can see that they're color-coded as well, so they're coded green for going long, and then when they fall out of confluence, but one of them is still going the same way, it'll go to white, and then when they both go back the opposite way, it'll change colors. So, what we did was we created a full-on algorithm based off of this. And this is, it's a really powerful way to find moves in the market. You can trade manually with it fantastically, especially when you add in some simple support and resistance indicators, that sort of thing. But what we did was we wanted to change it into an algorithm and make it automated to work with our new Trade Connect software, because I'm a really big fan of automated trading. So here we can see, here is an example of the automated trading. You can see here before the market, tried to take a little trade just pre-market, because this does trade up to an hour and a half prior to pre-market, the way this is set. And now, just like our Argentum Algo, this has a whole bunch of settings, so you can really customize this, including the time of day that it trades. So that's why it's down here. But you can see here during the day, it went into this buy right here, but something wasn't right. The algo didn't like something with it, even though it ended up being a nice trade. The sell here it ignored, and then this second one, it liked the second one and it went long on it. So you can see it caught a really nice trade right here. Now, not all of the trades are this good, of course. This was just a really good example because it was really clear. But here's an example of what this trade can do, or excuse me, what this algorithm can do. This is on ES futures, trading 5 contracts. It pulled 61 in profit. Given slippage, maybe that drops to about 50. Over, let's see, 109 trades back to December 5. And I think this went through 1st of February, if I'm not mistaken. So this was about 2 months worth of trades, maybe a little less. But it does pretty well in that time period. You can see the profit factor is nice. We're at 3.9 over here. And that's really what I'm looking at when I look at these algorithms and I look at the settings. It's the profit factor and also the curve. I want a more or less 45-degree curve, right? That's what I'm looking for. So it's pretty decent. Our max drawdown only hit about 7.2%, which is just fine. Not a problem at all. We'll look over here under the performance summary. Let's pull this up. What I want to see is average bars in winning and losing trades. Average bars in winning trades, 25. Average bars in losing trades is 7. That's excellent. Our losing trades are less than a third the length of our winning trades. So that means we are getting out of those losers quick. Very quick. And that's why our profit factor is nice and high. I'll explain a little bit of basics about the algorithm. And again, this is all of the rest of it, except for essentially the opening and closing conditions, are the same as Argentum. So if you already know how to use Argentum, then the rest of this will sound very familiar and you can probably skip it. But we'll go through this piece by piece here. We'll start with what we're just looking at on the screen. You'll see that we have these lines right here. Those lines are our stop out and our break-even point. So the one that's on the bottom, of course, is going to be our stop out. Okay, there it is. This one right here on the top is break-even. And what that means, and you can see this example right here, it's another reason I like this day. You see it actually hit that top line, it went back down, and then it stopped out at a break-even stop. So instead of stopping down here and actually losing a little bit of money, right, normal stop out, it actually stopped out at essentially a break-even point of where it entered. So it kept what it had gained a little bit there. because it does actually have an offset break even of a tick, which helps with slippage. So another thing you'll notice is that these lines change. They're not static. And the reason for that is because stocks aren't static, right? They move. The volatility changes. So if you're in a trade and it's just kind of going sideways, the volatility is getting really low, well, that stop loss should move in a little bit. It should, because the volatility is really low. And, it's not moving. It's not going in the direction you want. So it should cut it quicker. And the same thing is the opposite when you're in a trade and the underlying gets really volatile. The underlying is really volatile. It should move further out to give it more room to move around and to go the direction you want. So that's why you see these changing. They change based on volatility. We'll go ahead and pull up the settings here real quick. You can see right here, don't worry, we'll go through this at the top in just a second. Right here, stop loss. These are multipliers. They're not static numbers. They're all multipliers. So that's why I do it like that, is to adjust with the underlying. We'll go back up here. Remember I said times of day. So you can put in a time string here. There's syntax right next to it. We have this trading from 0800 to 1530, and let's see, 1530, and then it trades 2, 3, 4, 5, and 6, which means Monday through Friday. So you can cut out certain days, you can cut out certain times with the algos. You can have it just trade like, or you can have more than one program. So you can have a program just for Tuesday, Wednesday, Thursday at certain times, and then you can have a program just for Monday, a program just for Friday, and you can connect all of it to the Trade Connect software, and it just trades automated, and it'll trade different programs on different days at different times, depending on how you have your alerts set up. So it's super customizable. Because stocks aren't always going to trade the same on every day. Now, this particular one, this actually works pretty well, and it's nice when it works really well like that, but a lot of stocks don't, and you have to do that. You have to have different settings for different days. Up here, we also have direction control, so you can go long or short or both. And then we have trend or contrarian or off. And what this means, you'll see this line right here. It's the moving average. And you can set this moving average in the settings panel. When the stock is above the moving average, it will only look for longs. When it is below the moving average, it will only look for shorts. And that's what it means by trend. You can also do contrarian. So you can trade contrarian with the trend, right? And then you could set, say, like a static take profit and turn it into a contrarian trading scalper. Those actually work really well with a static profit target. So we'll go down here, trend. This is where you set the EMA right here. And you can use EMA, WMA, HMAs, or SMAs, and you change the length. We've got ADX and the MACD settings, right? So this is the ADX MACD confluence, and you can change all your settings right here. Volatility. On some stocks, particularly Forex, this is useful because you can't use the volume settings on Forex. Everything else you can use volume on for the most part. Forex you can't, so you have to use volatility. And you can put in a filter, essentially. If the stock has really low volatility, it won't try to trade it, and that's really useful to help filter out low quality trades. The rest of the time on other tickers, we have volume information, and what this does is it takes my cumulative volume delta indicator, and it uses it's actually, if you have the indicator, if you've seen it, it's the long length line on the indicator, and that predicts which direction volume is moving, right? Is it moving long or is it moving short, essentially, over time, right? Cumulative volume delta, and you can change the length right here. So this will help decide when it should open and close trades. That's why, or when it should open trades. That's why it didn't open here, but it did open here. Now, in this particular case, this would have ended up being a successful trade, but they're definitely not all like that, and it filters out more bad trades than it does good trades. And when we're talking automated trading like this, because this is designed to be used with the Trade Connect software for automated trading, you can manually trade with it, but that's what it's designed to be used with. So when you're talking about automated trading, you're looking to filter out, the bads and get the goods, and over time generate that positive equity curve, right? We already talked about stop losses. The break evens we talked about. Here's the offset break even, and this is set to keep a tick. Now, like I say, there is typically slippage associated, so having the little tick like this, it stops it out just prior to an actual break even, so it hits an actual break even more often. So this is pretty useful. On some stocks, you can keep a decent amount of the profit of the move. It just depends on what you're trading. Static profit target. So you can set, there's a multiplier and absolute value. So we could set an absolute value, and I'll move this so you can see. We'll say 4 points, right? So it's going to be 16 ticks. We'll say 4 points. And then we'll go to static profit target and watch what happens here. Yeah, see it changed right here. And it essentially scalped the markets right here. And if you look down in the box, it's a profitable equity curve. That's because scalping is a very worthwhile and useful strategy. But not always are we going to want to be scalping, right? So we can set this up as a scalper, or we can have it more as a traditional trader. See right here, does a much longer trade, make more money that way. But scalping is an absolutely viable strategy, and the Argentum algo I use to scalp with on ES, with 16 tick targets. Right here, we can disable the dynamic take profits, or we can add additional ones. So you'll see right here it says small profit. See it gets one. It'll peak up, come a little bit, and then take a profit. Peak up, come down a little bit, take a profit. And that's kind of what I designed this thing to do. It'll follow the trend, and as soon as it determines the momentum's kind of changing, it'll pull some money off. That's what it's designed to do. It does a really good job of it. You can also add additional ones. Let's see if it does it here. Yep, see there's an extra one right there. It'll find extra ones here and there, and it'll add extra take profits. It's some stocks will work better than others. It can frequently smooth out your equity curve quite a bit, or you can disable dynamic take profits if you're just going to rely on static take profits. And then this particular one, you can show the buy and sell signals. It's the same buy, sell signals that are already on here from the confluence indicator and the same candle coloring. And then if you'd like, you'll see these dates down here, dates and times. You can turn off live trading mode, and you can just select dates and times that you'd like to backtest. That's useful if you're testing a stock, and I actually ran into this earlier today, testing a stock, and it was trying to trade through FOMC day, and nobody in their right mind would let an automated algorithm run on FOMC day. So I had to backtest it before FOMC day, so that I could get a much more reliable reading out of it. So that's the kind of thing that you can do, and it works really well too if you're gonna do it for swing trading. This algo, as well as Argentum, works really good for swing trading, and you can you can set it daily here on the chart, and you can go back 10 years or whatever on it, and you can set your times right. So if because stocks trade differently over time. For example, AMD only started to trade like it does now in about 2018, 2017. So you don't really want to look any further beyond that, right? So you would use those dates to change the dates that it's testing. So anyway, that's the new Confluence algorithm. For an exact detail of how you're going to set this up on a stock and how you're going to find all these numbers. You see all these numbers right here on the side. That's all the settings. You can watch the Argentum algorithm video where I run through setting one of these up on AMD. It's all exactly the same. All of these settings are exactly the same, with the exception of ADX and MACD being a little bit different. So instead of setting trend on it, the short-term trend, you'll be setting ADX and MACD instead. That's it. That's the only difference. That's about an hour and a half long video. You can check that out. I'll link it in the description below. Thank you everybody for taking a look. If you would like to get this algorithm, you can get it 30 days risk-free over at tradersultimateedge.com. And then you can trade automated straight from your TradingView charts using the Trade Connect software, and that is at gettradeconnect.com. All linked down in the description below. Thank you. Like and subscribe. Take care.